A major war is brewing in the Middle East. Are your investments at risk? Now, hear me out. Some of the things I'm going to talk about in this video are extremely tragic, and I don't want to minimize the hardships anyone has faced. But that being said, this is an investment channel, and I'm here to bring you valuable investment insights and education. So that's where I'll be focusing today. This video will be the most comprehensive and informed view you'll find anywhere on what's happening now, what could be next, and what the investment implications could be. Let's start by recapping what's been going on if you haven't been following it that closely. On October 7th, Hamas terrorists attacked Israel, killed 1,200 people, and took many more hostage. Israel struck back at the terrorists in Gaza, and that war has directly or indirectly led to a significant uptick in violence across the region. Iran doesn't want to get directly involved in a war, but they have long supported Hamas, and a lot of the fighting has been through their network of proxies called the Axis of Resistance. They attacked US troops in Iraq, Syria, and Jordan, where they killed 3 American soldiers and wounded a lot more. The US responded by attacking militias in Iraq.
The U.S. has launched airstrikes in retaliation for an attack on a U.S. base in Jordan that killed 3 soldiers.
Iran also bombed Pakistan, and Pakistan bombed them back. Iran, Israel, and Jordan have all bombed Syria for one reason or another. Another Iranian-backed militia called Hezbollah has launched hundreds of attacks on Israel from Lebanon, which Israel has been responding to. And then there's Yemen. The US and Saudi Arabia fought a proxy war against the Iranian-backed Houthis in Yemen starting in 2015. Peace finally seemed like a possibility earlier this year, but progress has stalled since October 7th. Now the Houthis have been attacking commercial and military ships in the Red Sea, and the US and UK have been attacking their military bases in response.
Tonight, Iranian-backed Houthi militias showing no sign of backing down, attacking 2 more ships in the Red Sea with 6 missiles causing minor damage, according to US officials. After the US and British military struck 36 Houthi sites in Yemen in an effort to deter Houthi attacks on ships.
This is where we start to get into the investment implications. I'm going to cover 3 key areas: oil, inflation, and local economies. In each case, going through what's happened so far and what could be next. Let's start with oil. Up until this point, the oil price really hasn't reacted much, other than right after the October 7th attack. Actually, it's fallen since then. So why is the market so relaxed about the possibility of an oil shock with so much fighting going on in the Middle East? Well, I'd point to a few reasons. First, the oil market is in a period of oversupply, with record-breaking production from outside the Middle East, in places like the US, Brazil, Canada, and Guyana. Second, demand has been relatively weak because China's economy hasn't recovered like most people thought it would. And third, things have changed since the 1970s oil shock. OPEC's share of the global oil market has fallen from more than 50% down to 36%. And oil's share of the overall energy mix has fallen from 49% down to only 32%. Fourth, attacks have thus far been on shipping lanes, not on production. That brings us to what could change. There are 2 things that could cause a massive spike in oil prices, which I think investors are too dismissive of. First, oil tankers in the Strait of Hormuz would cause much larger disruption to oil than the Red Sea and Suez Canal. The Strait of Hormuz is the most important place in the world for oil shipping, with about 21% of all oil passing through there. Second, if attacks spread to production facilities instead of just shipping lanes, it would be much more disruptive. It's hard to put odds on either of these things happening, but they're not zero. With so many regional conflicts going on right now, between so many groups with so many different priorities, it's not hard to imagine things escalating, either intentionally or unintentionally. If that ends up causing disruption to oil production or the Strait of Hormuz, it could cause a massive spike in oil prices. If that happened, it would certainly feed through to global inflation, which is the next area that we'll touch on. Thus far, the main impact to inflation has been through rising shipping costs and supply chain disruptions. The Houthis' attacks on ships in the Red Sea have caused traffic through that area to drop significantly. Ships either have to take longer, less efficient routes, or they have to risk getting blown up or hijacked. That's caused shipping costs to spike. Almost 15% of global sea trade goes through the Red Sea and Suez Canal. It's the main waterway that connects Asia and Europe. That opens up the impact to a much wider region than just the Middle East. But headlines like these can be a little misleading. The IMF did a study that showed that when freight rates double, global inflation picks up by about 0.7%. But there are 3 important things to consider. First, while shipping costs have more than doubled in certain routes, Globally, they haven't moved that much. Second, for some perspective, even though shipping rates had more than doubled between Europe and China, they're still less than 1/3 of what they were when supply chains were all bottled up in 2021. And third, shipping rates can be a little misleading. These headlines all refer to spot shipping rates, which not everyone pays. The near-term impacts will likely be uneven. At the extreme, some smaller exporters with thin margins could be put out of business in the coming months. But for bigger companies, it's likely to have zero impact. Most of them are among the largest customers of the shipping companies, and they usually have long-term contracts in place that don't go up and down that much with short-term price moves. If the conflict drags on for a year plus, it could have a bigger impact, but until then, it will most likely impact smaller, lower margin companies. Ultimately, I don't expect a big impact on global inflation from rising shipping costs, especially in the US, which isn't as reliant on the shipping routes that have been impacted. If oil prices spike, all bets are off. But outside of that, inflationary impacts should be limited. As of now, the biggest impacts have been felt by companies and economies in the Middle East. Horrible situations in places like Yemen, the West Bank, and Lebanon are getting even worse. The civil war in Yemen has left millions of people at risk of starvation. And after a brief moment of peace, fighting has picked back up. Lebanon's economy collapsed and its government defaulted on its debt in 2019.
Lebanon is on the brink of economic collapse.
Now fighting between Israel and Hezbollah is destroying the southern part of the country. Not only is there no money for repairs, but it's caused the foreign tourists and bankers that made up 70% of their economy to flee the country. In the West Bank, hundreds of thousands of workers that used to commute to Israel had their work permits revoked, and government workers haven't been paid since before the war began. The government refuses to accept their tax dollars from Israel, so public services are shutting down, and there's a risk of a banking crisis. Egypt is also at risk of financial ruin. The government earns a significant portion of its dollars from tolls in the Suez Canal, which connects Europe and Asia by sea. Without that revenue, they're at a real risk of defaulting on their debt in 2024 unless they get another bailout from the IMF or someone else. Jordan already needed more bailout money from the IMF since fighting there has caused tourism to collapse, which usually makes up about 15% of their GDP. Eritrea's economy relies on fishing, farming, and mining exports, all of which travel through the Red Sea since it has tense relations with its neighbors. Humanitarian aid is having a hard time getting to Sudan since it also arrives through the Red Sea. Israel's economy is struggling as investors are pulling out and a lot of people have been called away from their jobs to fight. For now, the main impacts have been felt in the Middle East, but the risk of escalation is high. With so many different violent groups in so many different places, with so many different objectives, it's a lot harder to imagine a peaceful solution that makes everyone happy than it is to imagine someone crossing a line that can't be uncrossed. The more hardship there is, the more it will breed extremism and push people into the arms of militias. The optimist in me wants to focus on the fact that none of the biggest players, Iran, the US, and Israel, wants a bigger war. That's why the US endured so many attacks before responding. There is a long-shot peace proposal being discussed. It involves a ceasefire in Gaza in exchange for the release of the remaining hostages, and then a negotiation of a two-state solution with Israel and Palestine in exchange for Saudi Arabia normalizing relations with Israel. It would be an amazing outcome if it happened, but there are many huge obstacles to that. For now, the economic and investment impacts have been mostly regional, and they could stay that way, but if the Middle East economies continue to weaken and fighting escalates, or if the Strait of Hormuz or oil production gets disrupted, or something happens that forces Iran and the US to get more involved, impacts on the global economy could be much wider than what's currently being priced in to the markets. If this is your first time here, I'm Kyle, a former investment advisor to portfolio managers at Merrill Lynch and Morgan Stanley. The purpose of this channel is to bring Wall Street level investing information to Main Street. If you want to continue the investment discussion, I have a free Discord that I'm active in. The link is below in the description. Thanks for watching, and stay tuned for my next video, which will be an objective evaluation of Biden and his economic policies.